What is going on, everybody? Today we are going over Berkshire Hathaway itself by Warren Buffett, legendary Warren Buffett. We're gonna find the fair value of Berkshire Hathaway according to the formula that Mr. Warren Buffett actually uses to buy stocks forever of other companies. We're gonna find the fair value of Berkshire Hathaway if Mr. Warren Buffett would like to buy that stock today, and the price that he would be a buyer, which is 33% discount. Gonna use a formula that is mentioned in the book The Intelligent Investor, that was written by Mr. Buffett mentor, Mr. Benjamin Graham. If little side note, guys, before we start, I'm talking about Berkshire B. That's the stock because the price is $226, which you can also do Berk A if you want to. I mean, it's the same thing. I think I haven't followed them, but yeah, it's the same market cap, same thing. You can buy Berkshire Hathaway A for 340,000, which is that's you can buy one stock. Just look at the max. It started to trade at 3,000. No, it started to trade at $500 in the 80s, September 1st, 1980, which is crazy. But I'm focusing on Berkshire B, which is more affordable price-wise, more affordable price-wise. But let's start. Let's get going. So if you are going to get that, go with Berkshire B. Let's find what we need to find. I'm in the Excel, how to value a stock like Warren Buffett. Company name Berkshire B, BRK-B, Berkshire Hathaway. These are stuff are constant. Everything in the yellow is constant. 8.5, 2.4 corporate bond. Price today 226.4. We're gonna find this today. We're gonna find stock fair value and price we are buying, which is 33% from the stock fair value. This formula, guys, if you don't want to go over the hassle, not hassle, but go over the time that you need to read 600 pages book of The Intelligent Investor and put that formula manually by yourself, you can find this exact formula in the description below. In my Patreon, $10 a month, I posted a link about a month or two ago. Feel free to join. Check everything else that we got there, including how to make money with options and crypto and all that good stuff. But let's get focused. We need to find a couple of things. We need EPS, earning per share, right here, and we need this one, growth of Berkshire Hathaway. So we're going back to Yahoo Finance to find those two items. Okay, back to Yahoo Finance. Let's go over the stuff we need to find out. First, we got a market cap, 530 billion. That's half a trillion market cap. Do you think you can make a 10x from here to 5 trillion? I doubt it. I mean, this is a forever stock. It doesn't matter when you buy. We will find the fair value. I don't think it's going to 5 trillion, but I wouldn't buy Berkshire Hathaway as a growth company, to make 10x, 50x, 100 bagger. This is a solid, upper level, like 2 trillion, which is like 400% from it. So we shall see what we shall see. Other than that, we got the 52-week range, 160 to 234. Okay, 160 was very nice. I assume it was around March. According to the estimates of Yahoo Finance, and exactly near fair value with the 0% upside. This is what it is. For Yahoo Finance, we will find the price according to Warren Buffett. If he would buy Warren Buffett company, which is so silly. 1 year target 236, almost there. We're at 226. The thing we need to find out is this crazy number, which I assume I need to divide it by 1,000. Earning per share is 22,232. I assume I need to, if we do here, Berk A, and that's the real number because it's like 1,000. No, it's the same. 22,000. They really made 22,000 a year. Earning per share. We'll see. I will check in the formula. It's most likely 222.3221, and which is insane. 222 bucks earned per share. If you look at the PE ratio, guys, remember when I talked other videos, Zoom, and I will post those at the end. Zoom earn a PE of 500, meaning it will take you 500 years to double your money. well, not this year because 2020 is insane, but on average year it would take you 500 years. Tesla is like 1100 years to double your money. Again, 2020 has nothing to do with the stock market. If you believe in the stock market and plan to be here 10, 20, 30, 40, 50 years and forever, and your kids, grandkids, and so on. Earning per share. This is what I'm looking for. Let's go focus. 222.32. That's number one that we need for our Excel. And we're going to the second one. Second item is here. Analysis tab. Scroll all the way down and find this number. Next 5 years per annual, they're gonna grow in 23.3%. You know what? That's a amazing number. Amazing. There's a reason why Mr. Warren Buffett is named the smartest investment like in the stock market ever. There's a reason for that. 23% growth. That's insane. That's insane. That's like I don't know. I'm speechless. So I'm gonna put this number plus the one that we got, the earning per share, in our Excel and move on to what else we need to find. Let's go. I'm back in the Excel. I put those numbers. Earning per share, I did 222.32. If we're gonna go get like a crazy wacky number, I'm gonna change it to 22,000, but I think this is what they meant, like divided by 1,000, because it doesn't make sense to 22,000 earning per share, maybe with all the companies that they're holding. The growth rate is 23% per year for the next 5 years, which is crazy. And the next thing we need to find is AAA bond yield for Berkshire Hathaway, which I assume is around 3%, just like the big guys, Apple, Amazon, and so on. But before we do that, let's go over the financials to see if Warren Buffett will actually be a buyer before we find the fair value of Berkshire Hathaway that is owned by Mr. Warren Buffett. I'm in here, financial tab, back in Yahoo Finance. We got a couple of things: income statement, balance sheet, cash flow. We need to find a couple of ratios that Mr. Warren Buffett likes. Let's go over them. First thing, we need to look at the glance, because this is the last 12 months. I'm gonna take this number, the 2019 year, because we're not updated. Warren Buffett is old school. It doesn't update like every quarter, I think. In Yahoo Finance, I think they update this yearly. So maybe, but it's pretty crazy. Look at this growth. 2016, right here, we got ourselves 223 billion. 2017, 242 billion. You want this to grow. They grow by 20 billion. 2018, they went down to 225. And look at this, 2019, another $100 billion. 327 compared to 225. Another 100 billion. That's insane. Insane. Just insane. And then you look at the total expenses. You want to see a little, it's the same. But so the expenses were 221 billion, and the year after that 3 billion extra, but they made 100 billion extra, which is insane. That's just insane. So you're looking at this because it's not a regular company, and this company like controls so many other companies. You don't really have a net operating margin. It's not like they're selling. It's not Walmart or Nike. They're not selling anything. He buys companies, and whatever the companies make, that's what that's the income. That's why you don't have like a gross revenue, something like that. But we do have this one, net revenue, diluted net income available to the stockholder. With the net income, look at this. That's insane. Oh my God, I think I'm buying. I'm gonna FOMO. Look at this, $24 billion net income 2016. 44 billion net income a year later, another 20 billion. Then I assume they purchased something with $40 billion. They probably, I think that was the time when they purchased Heinz, the ketchup company, Heinz, I think. I'm not sure. If all the numbers adds up, I'm gonna add Berkshire. It's insane. So he invested like 40 billion, and we can find out what exactly happened here. And look at this, a year after that, 80. So he invested 40 billion, and he got the year after that 80 billion. That's just, it's ludicrous. That's crazy. 80 billion compared to 4 billion the year before that, or 44. No matter how you spin it, Mr. Buffett knows how to spend his money super wisely. For the ratio, we can take 35 billion. Let's do it real quick. We're gonna take the net income 35,845, and we're gonna divide it by the total revenue 279,200, the first number. Warren Buffett want like 20% net for all these companies and stocks that they invested in the companies. Let's see how much is a company makes. Is it 20% net or no? 12.8. No, he could do better other than him. 12.8 net percent. That's yeah, it is. It's I assume it's because of the purchase, but the free cash flow is just massive. Yeah, let's go over to the next one, which is the balance sheet. Balance sheet, again, you're looking for, first of all, growth. Total assets, you want them to grow year by year. 620 billion, that's a billion. 700 billion, that's another 80 billion. 707 didn't grow because they purchased most likely Heinz. And now another, look at this, 818 billion dollar. They're gonna make $1 trillion asset company in like 2 years or something. That's mind-boggling. And I would like to see this. If you, that's crazy. That's just crazy. He's a great investor. I'm looking for this ratio, total liabilities. I'm looking for policy holder, okay, unpaid. I'm looking for this one, long-term debt. That's my that's the ratio that Mr. Buffett is looking for. Long-term debt, they got 98 billion, up from 93, 96, 90, so it's the same. It's below 100 billion. Very conservative. It doesn't take insane amount of debt. It doesn't need to, other than either buy some companies or something like that, or buy even more stocks of Bank of America like it did recently. We're taking this ratio, 98 billion, 682, and we're dividing that by the net income, which you can find again. Net income is right here in the income statement. This is a very important number. You go back to the diluted net income, this one, yeah, 35. So divide this number by 35, okay, 35,845, and that technically basically what it means, that how many years it's gonna take the company to pay their long-term debt, not short-term, long-term debt. And Mr. Buffett would like to see in all the companies that he's an owner, a debt problem that can get solved by the net income in 4 years or less. So I'd like to see a number of 4 and below. Click enter. Less than 3 years, 2 years and like 9 months, 75, yeah, like 9 months, 2 years and 9 months. So that means that if nothing happens and they don't grow ever, they can pay off their long-term debt with the net income today. If they don't grow, if they just stuck, and that's not the case, as you can see with this Warren Buffett Berkshire Hathaway, that they can pay their long-term debt in 4 years or less. It's a very healthy company. Of course it's healthy. It's a company that Mr. Buffett owns. There's a reason for that. And that's all you're looking for basically in the balance sheet, other than the growth. Look at this. They grew by $100 billion in the last year. I don't know the numbers of 2020. I assume it's great as well. And all we have to do now is move to the cash flow. In cash flow, Mr. Buffett is looking for a couple of things. You would like to see the first one, operating cash flow plus, we got a plus. Investing cash flow minus, we got a minus. Finance cash flow minus, we got a minus. Of course we do. It's a Warren Buffett company. This is what he's looking for, all the companies that he's actually buying. Now let's go over what does it all mean. Operating cash flow, again, growth, 45 billion, grow from 32 billion, 37 a little down, then up to 38, then up to 41. Operating cash flow means the money that they're making from the operation itself, which is basically buying companies, and those companies are making money. It's gonna grow and grow as long as everything stays, doesn't matter recession, I'll be honest. This is like, that's a forever company. It's not a stock that will give you a 10x, but that's a forever company, Berkshire Hathaway. This is like a retire. If you're thinking, you know what, I'm not just gonna put my money in Palantir or Neo, all those nonsense that eventually all those hot stocks will burn your money. sooner than later. Let's be honest here. Sooner than later, you will get burned. This is a company that you say to yourself, you know what? I'm 30 years old. I'm 35. I'm 40. I'm 45. I don't want to buy NEO and hold it for when I retire 20, 30 years from now. What stocks can I buy for my retirement portfolio? Berkshire Hathaway is a great example. We're just going to find the price that you should buy Berkshire Hathaway for your retirement portfolio. So that's the first item, operating cash flow. We got ourselves a plus. Second thing that we need to go over is investing. And inside investing cash flow, I'm looking for a minus. Look at this, 75 billion. And the year before that, 5 billion, 30 billion. 75 billion a year today. That's crazy. The investing cash flow, meaning they are investing back into the company, expanding, buying more shares, buying more companies. In this case, just investing back in the business to give back to the shareholders. And if I'm looking like deep into what's going on exactly, I see 57 billion went in here on net investment purchase of investment. Doesn't specific which one. Probably the Bank of America that he bought. So he purchased about 243 billion year to date, trailing 12 months. That's investment. That's what he does. He just buys stocks. So I think this is Bank of America. And sale of investment, 186 billion. That's probably all the airlines. He sold all the Delta, United, and whatever else that he held. He got paid 186 billion. And he invested 243 billion. He bought like a storage something company. I didn't really follow, but I think I should because this is crazy. So that's what he made. That it's not UPS or whatever. He just the investment that he does, he just buys stocks and sells stocks. That's what he did. So this is what we're looking for in the investment cash flow, which I like to see as a negative, and we do. And next item on our list is finance cash flow, another negative number, which is what we want to see. Remember guys, we are looking for a plus, minus, and we got ourselves a plus, a minus, and a minus, because that's a company well run by their management, which is Mr. Warren Buffett and all of his associates. But let's look over finance cash flow. What happened here with 30 billion in finance cash flow? And this number is pretty big. It's a good thing, but a year before that it was like 700 million, and now it's like 13 billion. That's crazy. Before that it was 6 billion. Before that it was 1 billion. What happened? I would like to see a negative. That's a good thing. It either means buyback or dividends. And Mr. Warren Buffett proud himself by not paying dividends ever, which is pretty shameful. I'd like to see dividends, but the other way to grow the value of a company to the shareholders is doing buyback. Let's take it from, make it simple from the crypto world. If you do a buyback, the coin gets burned, so the shares gets burned, get out of circulation, and technically, theoretically, the price should go up. You don't get a dividend, but the buyback is the equivalent because the price goes up. So, it's two ways to improve the shareholder wealth long term. So let's click and see what happened. Cash flow from continue operation. I want to see where that 13 billion came from. And this is exactly where it came from. Here we go. 4 billion and 17 billion. So he got here. He got into a long-term debt of about 5.5 billion. Okay. But he also did a stock payment of 17.7 billion. That's the buyback. He thought that Berkshire Hathaway is actually cheap compared to the year before, which he did 5 billion, compared to the year before, which he did 1.3 billion. He did almost $18 billion in buyback. You gotta pay attention to this. Stop listening to TikTok. Go buy Helion. You gotta start thinking for yourself instead of listening to TikTok or YouTube. If anyone tells you Tesla will go to 10,000, they want you to click and watch the video. They're not gonna tell you go read the financial statement and see how much buybacks Elon Musk did. You will see that he diluted the shareholders by another $5 billion like 2 days ago. That's what you will see. You will not see, I don't know, I will do a Tesla for sure, but in the next week or so. This is beautiful. Mr. Buffett thought that Berkshire Hathaway is cheap, and we will find the exact price in a minute, and he bought $18 billion buyback. Now that's why, you know, I say I would like to have a dividend. But that's better, you know, that instead of giving you like a measly 1%, 0.5%, 1% dividend or something like that just to show appreciation, he just buy back the stock. That's crazy, just crazy number. Look at it, it's almost 4 times more than the year before, and that's how we got that number. And that's what you want to see. That's what you want to see in a healthy company. You get yourself a plus, you get yourself a minus and a minus. That's he did an issue of debt, and he paid another debt. So he did this. This is what we are looking for. Repurchase of capital stock. That's what I said. Did a buyback 17 billion. That's crazy. That's just crazy. And the end free cash flow is 27 billion almost. A lot more than 22. So we made extra $5 billion this year, which is crazy. He also refinance just to take probably a better interest rate because everything is cheap today. Let's find the last ratio for this financial statement. So I'm taking this number, capital expenditure 14,356. Okay guys, 14,356, and I'm dividing that by the net income. Again, going back to the income statement, scroll down to the diluted net income, 35,845, and the number that I want to see for Mr. Buffett is 25% and less. What does that mean? What is this ratio? It means how the management, which is Mr. Warren Buffett at the top, manage their money and their investment and the free cash flow. Less than 25% is exceptional. The management is super efficient with every dollar that they get in. They know exactly how to get it out and make even. If it's 25 to 50%, it's average, and average management. Beyond, that's it. You gotta know that. Don't listen to TikTok. Know your numbers. Read financials. It's not hard. It's just super simple. Leave a comment below if you think reading financials is simple once you saw the video, and also click the subscribe and bell notification if I bring you value. It's a good time. Why not? Yeah. Either way, and if it's over 50%, that's like horrible management. Horrible management doesn't know what to do with their money, and you need to know that stuff before you invest, and even after you invest. If you don't know how to read financials, now is the time. So let's click enter and see a number of 25% or less, and we got 40%, you know. So maybe there are Mr. Buffett, other people, I don't think he runs his money already. It's 40%, you know. I don't know what happened. Maybe the Kraft Heinz purchase was pretty bad. So now we got all this under control. The last thing we need to find is actually the fair value of Berkshire Hathaway. So I'm back in the Excel. I found the AAA bond yield, which is 4.5 right here. And basically once I click enter, I'm going to find two things. Number one, the stock fair value of Berkshire Hathaway, and the price that Mr. Warren Buffett will buy. Now, just a hint, I haven't done that, but if he did bought like almost $18 billion buyback, I assume he thinks it's super undervalued. You know, it looks high. It's like 500 million, but Apple is a true $2 trillion. Do you really think that this company is not worth $2 trillion with all the companies that inside of it? Most likely yes. In my opinion, this is like number one, which is crazy. And we're gonna see if from those numbers 22 and 23, from my experience, it's around $600-700, and we're like 220 now, which is crazy. That's like 3x from here. Just my opinion. We're gonna click enter and find out. Good time to introduce myself, guys. My name is Ziv, also known as Finance After 40, and while I am new to YouTube, you can check the description below. I have a TikTok community of about 15,000 plus members that are following me on TikTok under the same name, Finance After 40, as well as about 150 Patreon members. Also in the description, where you can find and get this Excel for yourself to do any analysis for any other stock. We got about 150 members there. We do selling options for income. doing some crypto stuff, all that good stuff for about 10 bucks a month. All link in the description. And without further ado, guys, let's find the fair value of Berkshire Hathaway. Dum da da dum, da 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 dum. Holy moly. 1200 bucks. 1200 bucks fair value. Wow. And the price that Mr. Buffett will be a buyer is 800 bucks. I think he in March, when the market crashed, he bought like 18 billion buyback when it was like 160. Look at this, 1200. This is, let's say we are 1200, let's say that's the fair value divided by 226. That's 5x from here. If they're worth 500 billion, 5x from here is 2.5 trillion. Apple is at 2.1, so why wouldn't they be 2.5? You know what? I'm gonna add Berkshire Hathaway to my long-term portfolio, slightly. And this is a retirement stock, you know, and if the retirement stock can make you 5x from here, not now, not next week, not even the next 5 years, but maybe 10 years from now or 20 years from now. If you buy at 200 bucks and you think it's expensive at $500 billion, what would you say about Apple at 2 trillion? We did a video about Apple, which I will link in a minute. Go check it out. Apple is, go check it out. Not gonna tell you the fair value of Apple. As always, guys, if I bring you any value, don't forget to click the subscribe button, like, and leave a comment which stock would you like me to do next. Also, bell notification, all that good stuff. Check Patreon, highly valuable stuff for 10 bucks a month. And I will see you guys in the next video. Thank you very much. Yeah.